Hey everybody, welcome back to Markets and Sectors. My name is Mike Fairborn. It's good to be with you today on this shortened, really week of holidays coming up with Independence Day on Friday and a half market day tomorrow. But glad to have you on board, folks, as we talk about what we've seen really not only just this week, but kind of the state of affairs with as it relates to the markets and sectors midway through the year. Want to talk about that in more detail. Welcome to each of you here today. I'm joining the chat by a good friend and colleague of mine, Mr. Cameron May. You can follow us both on X, as Cameron has noted there. Mike Fairborn, CS, and Cameron May, CS. Hello to you, Jay Richardson. Life in the Fast Lane. We've got Andrew, Crispy Riceberg, David T, and many others. Folks, let us know any questions, comments you have. Throw those in the chat box so we can address those for you. We're going to look at clearly, like this class states, markets and sectors. We're also going to take a look at maybe some of the economic numbers to be mindful of and what we've seen. I sent a couple of X posts out today on Twitter just to kind of highlight the status of some of the economic scenarios that we're looking at here as it relates to jobs and things along those lines and things to keep an eye on. So with that, let's dive on into our discussion. Start off with some disclosures real quick. Information here is provided for general information purposes only. Schwab does not recommend the use of technical analysis as sole means of investment research. With that, too, I wanted to state that paper money software application for education purposes only. Investing does involve risk, including for some products more than your initial investment. We've got to look at futures and futures options trading here. We'll take a look at here, but they do involve substantial risk, not simple for all investors. We'll just look at the charts as it relates to that specifically today. And lastly, past performance is no guarantee of future results or success, and historical data should not be used alone when making investment decisions. I did want to take a look at the stacks. We will have a new stacks coming out fairly soon, but the stacks is not a tradable index. The stacks should not be used as an indicator or predictor of future client trading volume or financial performance for Schwab. Now, having said all that, I'm going to go right into the S&P 500 here and just take a look at how we're performing today, folks. We are at, I'm sure many of you are aware of this, but we are at all-time highs right here. I'm going to go ahead and extend this. This was kind of an ascending triangle to a degree, as you can see right there. And we did break higher above that. Now, just a quick note, as you're looking at general markets like this, we are dealing with 500 companies. That's a lot of companies, and believe me, not every one of these companies is going up. There are a fair number of these 500 and change that are going down as well. And with that, it's very, very difficult to get an entire, with all those sectors, 11 different sectors out there, to get just this explosive move to the upside that just keeps going almost parabolic. That's really, really tricky and challenging to do, particularly after getting above some longer term highs. Generally, what one might expect to see, maybe some would say it's just a higher expectation, is something like this. Break above an all-time high, we retest. You break above an all-time high, you retest. Do it again. Every one of these is like an all-time high. And how many times do we retest? Folks, we retest on every single one of them. In other words, we didn't have just a major parabolic move and then we started making a new trend from there. So the whole point here is as we are breaking out, maybe expectations for some traders, investors might be that, hey, even though we are rising above this level right now, the possibility of a pullback here could be higher. We'll wait and see on that. I want to review just the ES here. And by the way, that might mean a lot towards what could happen in your portfolio too. Sometimes you're running at all-time highs. You might just want to be mindful of it. Maybe shorter term moves and just the possibility of a potential pullback here. Wanted to show you over here. We did see the RSI, obviously it's been showing strength. It broke higher. We're looking at the ES now, futures, just as a reference because we can get volume. But you'll notice collectively, volume, when you get this many days going up, it's kind of challenging not to see, like, let's say the money flow going higher. But that money flow is pretty much on par to where we had seen it all the way back here, meaning that we're slightly above our price highs over here. The prices are higher, clearly higher, but money flow is just approaching those same levels, right? So maybe not a ton of volume. You can kind of see that over here. It's been diminishing a little bit, and not to say that it can't go higher. It's just that maybe there is a little bit of slowing here up at the top. A quick review of the NQ as well. While we're on the futures contracts, a little bit different here actually. Technology seems to be leading the way, and we've seen some strong fundamental indicators, economic indicators, previously pushing the markets higher. But there you go. I mean, that is a massive move off this low. I don't know how many people anticipated this after kind of the tariff scare, that we would be this much higher in the market. That is a huge recovery. I know a lot of people were saying we just don't expect a V-shaped bottom. I remember listening to the economists and analysts say that. Well, you tell me, folks. Does that look like a U bottom to you? The U bottoms are kind of like this. Or does that look more like a V? Yeah, we'll see what the analysts think about that one. That is more like a V-shaped bottom for sure. So something to be mindful of there. I'm just going to put this out here too while I've got it. Yeah, just a quick note. I sent this out just through, just on an X post here. I wanted to highlight just a couple of quick issues before we go into it. By the way, Cameron just noted there is a survey link in the chat. Thanks for that, Cam. Folks, if you get a chance to fill that out, that would be fantastic. There's only 2 questions on there, unless that's been changed. And so very, very short survey. And it has a comment box in there. So if there's anything you find useful, informative, or whatever the case might be, I look at those, my manager looks at those, and I do appreciate that, and love to see your comments as well. All right, with that, by the way, too, if you're finding value out of this presentation, go ahead and just smash that like button. It lets me know that you do like the presentation, and also subscribe, bottom right-hand corner of the screen. If you're not already subscribed to our Trader Talk channel, you would get this coming up more frequently, these sort of content, if you are subscribed, as you get on YouTube. So just a side note on that. Cool, we got that out of the way. Now, ADP employment report. This is always fascinating when they release this, because it does give us a sense of what the employment situation looks like. Because right now we're looking to see if there might be a cut in interest rates to potentially stimulate the economy. And how does that stand? I do want to look at the CME Fed watch list tool to help us with that too, just to give us some general ideas of what's out there. But look at this. Overall private sector employment change. You can see over here, so it came down as a negative 33,000 jobs. So marking the first outright job loss since 2020. What was 2020 over that time frame, folks? That was the coronavirus. On this link here too, what I've done is I've just put in here for you a breakdown of the establishments, 1 through 49 employees. You've also got some others in there. That was obviously, the 1 through 49, there was 47,000 lost jobs in the small establishments. So be mindful of that. Big chunk of those came in the 1 to 19 employees. There are a lot of small businesses out there that kind of, really help to power the economy. But I'm just going to click on show more to show you this, that as you get into the larger establishments, the mid-size, the 50 to 249, 12,000 jobs gained. But you could see collectively that there was a loss overall in this group. If you look at 50 to 49 employees in total, look right there. Well, you did lose about 15,000 net. Now, the large establishments, 500 employees or more, that is 30,000 jobs. That was the only segment with a net gain, as you see these segments here, small, medium, and large. It's very, very interesting to see that because, we might be seeing some slowing there. And what that could really do is prompt the Fed to perhaps cut interest rates, right? The rates have been high, and that's one thing to keep in mind. All right, let's do this. I want to show you that CME watch list tool as well. It's not there, but it is, I have it over here. Where do I have it? Hang on a second, folks. I had it right there, and there it is. I've just got to, no, that's not it. There it is. Come on. Where are you? It's hiding. Okay, I'll have to pull that up. I don't actually know where it went, but I do have the CME Fed watch list, and I will pull that up just momentarily. Let's look at the stacks while we've got it. This is one I wanted to show you anyways. This is the Schwab Trading Activity Index. Let's change that color so we can actually see that a little bit better. But right down here, and what have we been seeing recently? Now, I bring this up because we're going to see another announcement, another little dot, I should say, on our stacks. But what's really interesting is over, through 2020 through 2021, after that, really 2022, a lot of investors did not come back into the market, maybe a lot of the retail investors. And you can see just the sizable move to the upside here in the market, but we just didn't get the buying activity. As a matter of fact, we're below lows over here. So that is interesting. I don't know if we quite have the breadth of buying, you could say, across the board. Now, that's one examination of breadth, but on the other side, you know what is above 1% today? That's the Russell. The Russell is above 1%. If we take a look at the Russell right now, have clearly, and you guys know this along with me, we've been looking at this shoulder. This had one of the clearest shoulder head shoulders that in the market right there, inverted head and shoulders. Just paint those lines out here for us. And there's the breakout from that level and then kind of a retest. Now, this shows us maybe some breadth in terms of small cap stocks. Now, remember, a lot of these small cap stocks are not, the vast majority are not global. They're like national, right? Just in the US type companies. Now, let's think about tariffs for a moment and maybe the benefit of tariffs for companies in the US. This might be interesting. I'm going to show you a price extension of this. But we have all these major other market indices that are making new highs, right? Is it time for the Russell to finally get there with the tariff situation? I want you to look at this chart because that's a little ways to run. We're just barely getting going here, but the trend is fairly established. The average US tariffs have jumped 13%. Okay, so keep that in mind. That is something out there to be mindful of, and and watch it. And how will that really influence, interest rates with some of the cutting? Excuse me, some of the warning signs that we just looked at. There is the CMA. I just pulled it up here. With that though, I wanted to highlight, how you can look at this and utilize this. We are in July right here, and it shows us that there's about, of all of the Fed members in the Fed meeting, there's about 80% approximately of those members. So, 8 out of 10 of them are saying that interest rates are likely to stay the same, which is where we're at right now. 4.25 to 4.5% on the interest rate. There's only a few that are less than 25% are saying that they anticipate a cut, but things do change pretty dramatically right over here in September. So be looking at this 23%, 23.3 for an interest rate cut in September. What percentage does that go up to? About 72. There's only about 6.5% that say, hey, we think that rates should be staying right now, based on all the current information, at about 4.25 to 5 or current levels. There are even some that suggest maybe 2 interest rate cuts by September. Now, if we go out to October, you can see that now we're saying about 50% are anticipating at least 2 interest rate cuts. So really, if we're looking at those Fed rate probabilities, we're looking at 1 cut here in September and maybe 1 cut over here, just based on the higher number of probabilities. And folks, what is that going to do? That can certainly help to stimulate the economy. So I wanted to hit some of these big indications and to kind of look at that. We'll go from there. But let's do this. Let's continue on. Now, there was a question that came through from Villager, and I'm just going to actually pull this up because this is one way that was mentioned. This, just like anytime you're in X here, the question is how do you get these to be put into Thinkorswim, so that you can view them in charts quickly? And that is, when I say these, I'm just saying these symbols. You can simply just copy the symbols here like this, but you can't put them in as like the dollar signs or the number signs, right? So what you can do, this is a question, this was just a topic request that I'd promised to answer. Let me just pull up Excel just to show everybody this real quick, because this is important too as we get into it. But you can go in here into your Excel. Let's go ahead and paste this right there. We've got them all listed right in here. And what I can do is I can go into, let's see, find and select up top here, one of the features in Excel. I'm just going to go down into replace. And what I'm going to do is replace that. I'm going to say find the $sign, which they all have in front of the symbol. I'm going to replace it with a space down below. And I'm just going to say replace all. There you go. They're all gone. So now you can copy this, right? And you can take it over here into the Thinkorswim platform. And what you can do, I'll just do this right now. In the left-hand sidebar, you can simply come over here and go to watch list. Click on this. Once you copied it, create watch list. Then you can simply just name that watch list, import the symbols, and you've got it. So, but that's, I think the real question the villager had was just how to remove those, because sometimes maybe you do want to copy them, you want to look at all the charts. Instead of plugging those all in individually, like I have here, you could do that, because, I post a number of these and so do others. I know Cam and some others do it as well too. All righty. So there you go. That is one way to do that. All right. Let's go ahead and continue. Everybody, good to be back with you. Sorry for that brief technical difficulty, but we are back. We're back and we're looking at sectors. And so I just want to make sure we wrap that up. Folks, any questions on that you might have had in terms of transferring those symbols over, just let me know. We just went through that, how to take the $sign off, how to take the number sign off, and to get those plugged into the Thinkorswim platform. So it's a great tool, and I want to make sure you know how to do that. So there we are. Yes, we are in fact back, and we're set to go. Excellent. Okay. Well, we scooted on over here. I know we lost you for just a bit. I think we captured everything. We just made a transition over here into our sectors. We want to take a look at the sectors and go through there right now. So a quick note on industrials up top. Industrials have really been performing very, very well. And we've talked about this with tariffs. We looked at this last week. Is really trying to kind of highlight, hey, what areas of the market might show the strength, and collectively we're seeing strength in here where we broke above highs. Looking at the sector as in the S&P. So all the stocks within the sector of the S&P, if we missed that part, we got that covered now. That was kind of a nice long, well, it broke out, so we almost want to just label that a flag, and kind of breaking out a little bit from that flag, right? There could be a longer term extension here. We'll see what happens, but like we said, tariffs could play a key role in that. One of the companies that we talked about, that we put actually a trade on in this class that fell squarely in that group, and it looked like this was Caterpillar. So we're still just holding CAT as well. In this class, I've added it to my swing trade class as well, but you can see we're getting close to maybe a longer term breakout move. Sometimes these macro drivers, folks, will tend to just keep going and going. I mean, they can be drivers. Now, sometimes they might not, but look at the extent of maybe some of the volume. Contrasting this volume in the industrial sector with the SPX. So SPX, okay, less than in terms of the money flow, clearly, maybe some of the industrials, less than CAT if we are looking at money flow. I mean, massive spike, right? So not only, that's kind of like a parabolic money flow. I mean, this is just massive amounts of strength here. But the issue is we're getting like bigger volume buildup here as opposed to what we were seeing within the S&P 500 collectively. So, that's important to do because we're looking at sectors that are showing us strength. So then we can go in and take a look at some of these companies. CAT, I think in this one is actually, this paper trade is doing okay. There's only 50 shares there, but it has continued to come out of this sort of bull flag type pattern, right? And this was just all done basically. I mean, much of this was done, sure, there was a pattern in there. We like to look at the technicals, but we're combining that potential economic driver with it. Okay, so we've seen some strength there. We've seen some strength in technology as well. Let's go back to our technology group and we'll take a look at that right now. Let's see, there we go. So let's go to our sector grid, and you'll see technology very, very similar to industrials. In fact, you can just make some quick comparisons as you look at it over here, kind of a bull flag and a breakout. A lot of times when you get a sector bull flag and breakout, there's oftentimes fundamental drivers behind it because there's just so much going on. I mean, to get that many companies going higher collectively, sometimes there could be fundamental economic drivers. Oh, down here, if the economy strengthens, we could see this continuation too. We saw the NDX really giving us some substantial strength going higher. So you've got to say tech played a big role in that, maybe communication services as well. I want to look at those too, but energy is a little bit risky. So just as a side note, energy, there could be some riskiness with energy itself. AI, as we look at tech, what are the drivers though within these groups? We talked about tariffs up here. For technology, AI and productivity, semiconductors have been really, really strong as of late. That was actually an X post that I sent out this morning. But some of the valuations are getting a little bit higher too. So we're going to have to see maybe earnings come in to lower some of those PE ratios. Here is just the other, I just want to show you because I'd sent this through, what were the leaders on the day? What is breaking? In other words, so you guys can follow the kind of the logic here, I'm tracking the sector, right? I track it for this class, I track it as well myself. But as you can see over here, sector breaking out. Okay, so what's leading this group? What's leading specifically, let's say in this case, the NDX? Because maybe we're rising out of that bull flag. Well, we can come over here and we can just pull that up and look at it right here. This is just a good, quick way to do it. Just go in the Market Watch tab, click on that Market Watch tab, and just sort by mark change. You can look at volume as well. But what do you see here? Semis, semiconductor, quite a few. So that's where the real strength's been coming in terms of tech. Now, in terms of healthcare, it's been sort of this biotech. There's Biogen, Regeneron. There are others in there too. Gilead has been in there from time to time. This is what's just been leading today in the NASDAQ 100. If you guys want to take a look at that, let me just quickly post it, or you can just find it either way. But there you go. Oh, shoot. Villager. Yeah, you missed it. So we did, we did talk about that. Are you able to take a look at that on the recording? Okay, because I've got some stuff I've got to get to, but I did make sure I wanted to cover that. I thought it was a great question. Hopefully that illustrated that for you guys as well. So perfect. All right. All righty. We got to it though. It's on that recording. Those recordings take about maybe an hour to get in place at most, I think. They have to go through a process of being archived though. So there you go. Well, let's see what else is going on in this group over the last 5 days. Let's just do a quick scan and find out in these groups right now. What stands out in each of these? Scan tab. Let's clear this out. Let's do an easy, quick scam right in that stock hacker S&P 500. So great. I just love doing this because it's so insightful as we can come in here and just now that we can see the charts, we have an idea of what's been moving. All we need to simply do is go down here and tap into, well, information technology. We're going to see some of the semiconductors, but collectively, how has technology been doing in the S&P 500? Remember, we're intersecting that industry with it. So I come over here and I click on scan. There's my 5-day. In other words, what's been moving over the last week or out of the flag? We could do however many days we want, but what are we seeing here showing the strength? It's right there. Using that percent 5-day change, which is now built in to the Thinkorswim platform. Click on that, customize. Folks, you got it right there. This is what's really been moving. Solar companies. Now that's a semiconductor, but it's listed as semiconductor, but really it's a solar stock. I have the sub-industries listed so you can see them. A lot of semiconductors and others in there too, but I'd say mainly semiconductors. Technology, hardware, maybe being the next one, maybe a software in there, Oracle. Okay, helpful stuff. I wanted to see industrials. This is how we found Caterpillar, by the way. we went through this exact process. So just to let you know, we don't do this stuff just for fun. I mean, we're going through to like, this is an actual approach to try to find what's moving over what we might be seeing in terms of the flag or whatnot. Industrials, let's scan again. There you go. We got to highlight it. What's moving the most. It's not Fortive. Fortive's getting smashed. It is going to be BLDR, LUV. You've got Honeywell. This is one we were looking at. We did not place a trade on it, but we did see there's CAT right there. CAT's there. CAT's been growing, gaining some strength. Honeywell. Oh, dang. Sorry, one second. Got to click off my on demand. And we'll get into Honeywell right now. Got to move out of that one. There we go. HON. This flag pattern we talked about, the flag coming out of the range, that's a pretty good strength right there that we're seeing. Volume, okay, it's starting to tick up a little bit. And you can see volume maybe at a little higher plateau. But that right there was the flag pattern. Again, this is kind of the tariff theme that we're looking at here and collectively sort of watching that unfold as we go through this right now. Now, again, what could help drive tariffs? What could help drive technology? What could help drive other areas here? Basically, the entire economy. What could do that? Well, it could be the possibility of those interest rate cuts. I'm just going to go back to that right now. Let's just look at the 10-year, 10Y right now, /10Y. These are just the futures we're looking at here. But if there's an interest rate cut, I mean, this is what we've been at for the longest period of time. We've been holding just a higher plateau. One thing that does drive the market too are mortgage rates. Mortgage rates are approximately 7% right now. That's really quite high relative to what it's been in the past. Obviously, here is a weekly chart of the 10-year. Oh, we're not getting too much. Let's do this. Let's do TNX :CGI. Now we're going to get a longer term perspective of the 10-year T-note. Okay, and you can see where it had been for, well, I'll go way back. Wait a second. That's supposed to be my, there's my, yeah, that's a very, very long time frame. But you can see that we were down here in the 2% range for a very, very long time. And then we dipped down into the, wow, low levels. Remember, you just got to move the decimal place one to the left. This is like 4.293. You see that over there? I wanted to note this because I did make that subtle shift to the TNX :CGI. So you just take the decimal and move it to 4.293, very close to 4.3% interest rate right now. But look how long we've been holding there. Oh, this is like 22, 23, 24, 25, a higher rate than what we'd seen previously going all the way back. And we'd held it lower. I mean, this is literally 1.5 interest rate, an interest rate here. If we got a couple of different cuts down here, like we'd seen on that CME watch list, that could further stimulate the economy, folks. Well, okay, let's do this. Let's take a look now at some of our big major market drivers, a lot of times that we like to look at here as we do our market and sector review. Some of those insights there, really, really good signs from the advanced decline line on the NYSE. That further goes to show that there might be more breadth in the market as it does relate to, well, we look at the Russell, right? That's a larger basket of stocks that have not been moving. Now, that's small cap, generally speaking, could be getting benefit from the tariffs being more nationally located, companies in the U.S. But NYSE is a bigger basket, 2,700 companies in that group, approximately, a little bit more than that generally. But look at this on the NYSE. Advancers, decliners, this can be a great driver in terms of breadth. Now, that doesn't mean that we couldn't come back down and maybe do some ebbs and flows in the market, but we'll see what does happen here. That's quite a positive. Actually, in terms of the McClellan oscillator, some really good follow-through strength right now. And what we'd seen a while ago, back in April, we made note that the summation index was perhaps bottoming and starting to shift higher. That index, based upon the oscillator itself, That's a real positive too. So, you know, could be ebbs and flows, but this is showing some strength and potential breadth out there in the market. Key point, SPXEW equal weight showing the same thing. Now, we don't have a new high yet, but that is an excellent follow through in terms of the equal weight of the S&P 500 index, as opposed to this right here. You know, as we look at the visualize and these massive movers that actually do drive and power, you know, the S&P 500 index just based on their market cap. If we made all of those the same, maybe the size of, I don't know, General Dynamics or something, to get all 500 to fit in there, that's what you're seeing right here. And that's an excellent breadth indicator. Folks, again, I'll type that into the chat so you guys have it. SPXEW right there. Great. Okay. Now let's continue on with this. We do not have any indications of the omen, which is positive news. No 52-week new lows combined with 52-week new highs. As a matter of fact, when you're getting a high over here, that's a positive, but you don't need to get that. You can still get an omen spike. Notice over here, tons of those, many of them at this high, and then a lower high. Okay, breaking some ground a little bit higher, maybe 100 new companies, 113 as it stands right now in the NYSE that are making 52-week new highs. We're not up to the 250 mark, but it would be interesting if we could march up to that 250, because that's traditionally been the area we try to break out of, because we are making new highs. That is the NYA, I should say. NYA right there. And we did make new highs in the NYSE, the NYSE. Okay. Let's continue on. I really am trying to get to this page right here. This, I think, is absolutely amazing that we were able to do this. Now we're looking at the S&P 500 index. Seasonally speaking, this is our average of the past 10 years of the S&P 500. And these are the seasonal type patterns of that average 10-year time frame. The 20-year, the 50-year, we don't have 50 years, but I've looked at the 50-year, looks very, very, very similar to this. And that's what you tend to get. And we're actually getting back in. Notice we're getting back into this a seasonal type pattern, sort of maybe the summer rally. Right now, I mean, things can change, but there you go. What I find so fascinating is we were down 14%, 14.5. And we were down even further relative to the market at that time, because the market generally, on average, is up, you could say, about 2%. So relative to the market, where the market was at, we were down almost approximately down 17% relative to the market. Now where are we? Look what we've done. We are above the market at this time of the year. We're at 6.12% up on the year on the market. So starting from this point here, that's sort of impressive. I mean, where would we traditionally be? Just under 4%. So we're already plus 2%. We were down negative 17 on the year. Wow. For those economists, we're saying this is not a V-shaped tight bottom. Exactly. That's exactly what it was. In fact, many of us, remember we were over here? I know you guys were right there with me, but right there. Shoulder, head, and shoulder. We looked at this quite extensively on a lot. That's the market this year. I know we're just looking at the line chart, but we just got through looking at the Russell, but that was an interesting price pattern that did break the neckline, and it really didn't disappoint, did it? All right. So that is amazing recovery given the worries that were occurring right down there when we were down so low relative to the market. Yeah, it's just crazy, Riceberg and others. Yeah. All right. Yeah, that's the I believe on the, let's go to a longer term chart. I'm going to jump back to where we were before. I'll throw on here for us because Kevin did mention here like a golden cross. I think we just hit the golden cross too, which is a sign of a longer term sort of a move in the market, perhaps. I mean, we might get longer term strength. Let's just do a couple simple moving averages in here. I think that's an excellent one to look at right now. right there. Click, click. We'll get a 50, we'll get a 200 in there, and we'll see what we've got. Sure, we'll use this. We'll use that color. That's fine. There's our 50, our 200 will be up top here. But a longer term moving average crossover, the 50, folks, above the 200. Let's scoot on down here. We'll make this a little bit thicker, turn it to a gold color. We'll give it a little style, and let's see how that looks. Boom. Kevin, yeah, that doesn't happen too often. And when was the last time this happened? We got to go back in time, but you're getting it right there. 50 above the 200 RSI has been holding up into the stronger range too. When was the last time this happened? When was the last time this happened? Let's go ahead and take a look. Just jump back here. Because again, what does that tell us? Well, it could tell us, oh, I hit max. It could tell us about that longer term extension. Just give you an idea of how long those extensions can be. There you go. There's the break above right here. This happened just near the beginning of 2023. There is your 50 crossing right above the 20. Oh, Kevin, sorry. You're looking at the last chart. Well, we're looking at this chart now. And by the way, we were spot on. I'd actually looked at this earlier in the day, and we were just getting that as well. So, yeah. What was that last chart, Kevin? I'm just curious because I'll throw that in there too while I have them pulled up. Happy to do that. In the meantime, though, what we could do, I just wanted to quickly state, folks, want you guys to have a fantastic holiday coming up as well as we go through this. But, you know, as we talk through this, yeah, if you found value out of our presentation, for sure, smash that like button and subscribe. Love to have you on board. There is a survey. Cam had just posted that again. We'll go from there. Oh, seasonality. Let me just take a look at that. Oh, seasonality. Well, seasonality would have been the SPX as well, because we were looking at the SPX seasonality. So yeah, we would have actually had that crossover on that, at least in terms of the SPX, not the average necessarily. Okay. All right. So I think we're still on the same page there. But yeah, interesting to see that. Final note, though, I just want to see how we're doing over here, and then we'll leave it there. But there is our market forecast right over here. You can see the market forecast line really showing some strength. Remember, if you're above 80 on that market forecast, and we're only using the intermediate term line, you can stay there for a while. And by the way, when I say a while, I mean, this was in August and we went all the way through to December, basically holding in that range. So yeah, just, 1, 2, 3, 4 months of a strong upward move using that proprietary indicator that we have, you guys have access to right off the Thinkorswim platform, used namely for markets. But holding above that 80 is a sign of market strength. And the way traders will look at that is they'll say, if I'm above 80, then according to the market forecast, it's giving me an indication of, it's okay to go long if I see those entry points. Now that's individuals. Those are traders that use the market forecast that way. But that's really a common approach in using the market forecast indicator. So you can get that indicator just right up top here in that dropper icon and just go to market forecast. In fact, I'll just quickly click on that just while we're here. Market F for forecast. You got it right there. All I did different, well, I've got it listed, but I'll show you where it's at. Just take out the momentum, the near-term lines. Those are very, very quick lines. There's your intermediate term line. And that, folks, is the line we are looking at right there, holding above 80. Because remember, it doesn't matter the direction of that line. As long as you're above 80, according to how traders will use this, it's showing that kind of strength. So love the comments and the questions coming through. Appreciate all those. Yeah, there is that survey there as well. Folks, have a terrific Independence Day. Half day off tomorrow as well. But hey, we'll look forward to future discussions with you in this class and others. Everybody take care. Thanks so much, Cam, for your help in this class as well. See you all next time.